Yo, good morning, traders and market makers and market traders. Welcome back to another episode of Market in the Morning. We got a great episode today, guys. We have the one and only Nalab on with us. Now, usually Thursdays we have Jeev, but we have our co-founder Nalab with us as well. So he's fantastic. As you guys already know him, he's on Tuesdays with us for Market in the Morning. Great understanding of markets, great fundamental analysis, and of course, just a great guy in general, and put together a great software. So guys, hit that like and subscribe button because Market in the Morning starts right now. Yo, Nil, good morning, man. How are you?
Morning, Kev. How are you, brother?
Doing good, man. Doing good. Happy Thursday. Can't believe it's Thursday already, dude.
Dude, honestly, this week feels super long. Like for
Yeah.
me, it's personally been feeling like a long week. I think that's primarily because markets again have been just in a bit of a range bound on gold,
Yep.
and then not a lot of clean movements happening. So I don't know. Weeks like this just feel a bit longer, right?
Yeah, exactly. They feel longer, they feel dragged out. When you're sitting, when you're trading, you feel like, what's going on? Like, what am I waiting for?
Absolutely. But I'm excited, dude. We got some data in 8 minutes. Got initial jobless claims coming out for United States. Lots of people in the chat. Good morning, guys. And it's going to be exciting to see how that impacts gold, how it impacts ES, and just dollar in general. So I think we
Yeah.
should just jump right into it, huh?
Dude, let's do it.
Let's do it. I think my screen is up now. Awesome. So we haven't had a lot of data this week besides like Richmond Fed, that data that we had come out, but we do still have the same macro biases holding weight across all markets. From our last market in the morning, we talked about ES potentially bouncing off of these at this level or this level, and we can see clean one-sided movement. Money flowed back right into U.S. equities, and you can see a 2.2% move on S&P 500 since the last market in the morning when we were looking at this price handle over here at 68.35. Gold, on the other hand, after creating this all-time high, so starting all-time revisiting 5250s, as we were talking about the buy plays that played out, as well as the buy calls from here, 5100 that played out, we have now been in this range and we're waiting this data that's supposed to come out in about 7 minutes. So initial jobless claims, as we know, and I'll zoom in a bit here, initial jobless claims is forecasted to come out at 215,000 jobless claims, right? With the prior being 206, minimum being 203, and maximum being 230. So if we exceed any of these ranges, we should see more heightened volatility, therefore could bring opportunities for cleaner trade setups, right? If we fall near the forecast within the range, then I wouldn't be expecting too much volatility to come out of this. It may just be used as an excuse for the market to continue in the direction that they're already positioned in. In this case, gold buyers have been in control for past 2 years, and it seems and every intraday movement or higher time frame pullback gets faded out eventually. As you can see, we have massive outflows from 5,600 down to 4,400, but money rotated right back into gold when the conditions and macro factors lined up once again. So again, we had buyers jump back in at 5,100 on gold over here, and then we have been holding above this 5,150s area, where I have personally been taking buys as well. So I'm currently in longs from 60, 66 and 65, 51.66 and 51.65 during pre-New York hours right over here. And I'll be looking to see how data can potentially either go against me or help this position move in my favor. In order for this position to move in my favor, the data will have to come out like this. So we have 215 as a forecast. If it comes out higher than that, or above the maximums of 230 and 235, then we can get a very bearish dollar. And in turn, we're going to get more flows into gold, and gold push into 5,200 and break above this 5188. If initial jobless claims comes out lower than forecast and near the minimums, then you're going to get the opposite impact, because that means a more hawkish monetary policy, as jobless claims aren't as high as markets were forecasting, right? Does that make sense, Kevin?
100%. 100%.
Awesome. So again, just to reiterate everything that's been going on, we are still getting those Trump tariff threats are still in order. We got the nuclear Iran tensions going on, right? Smash that like button is another macro factor that's playing across all market in the mornings. And yeah, everything is looking very status quo. All equities, S&P 500 and Q futures are bullish. We also see GC is bullish, right? Same as gold. So we are just now waiting for this data release. And this is labor market data, so you know that it impacts rate cut expectations or just overall rate decision expectations. So we'll continue to monitor, but overnight, gold has been just ranging, and it is not the cleanest conditions. Like I'll tell you what I've been through in the past 24 hours, Kevin. So I actually had a buy position right over here that I got taken out at break even right over here. Okay. So that was $0 made for me right there. I had then again a buy position in Asian session over here with targets towards the upside that got taken out at break even again for me. So you know what? But here's the thing: when I have conviction in my analysis and trade, sometimes it does take more than a couple times to get your positioning right in the market. Right? The market's not always going to behave in the most optimal way that you would like for it to happen. Right? I would have loved for this trade to just continue to my target and play out, and I could have been done yesterday. Right? But my third attempt hopefully plays. If it doesn't, then I will wait for a lower price zone to look for buys. Right? So if you can't find the news in the economic calendar, it's due to you having certain filters set. So make sure that you set all your filters properly, your categories, countries, whether you want to see high, medium, low impact. And then the overall news feed will come up in the news feed section. So we'll wait for this data and we'll see how it impacts gold. I would love for initial jobless claims to come out higher.
Yeah, that's what I was looking for too.
That's what I think. It would also play in turn with how Fed has been emphasizing labor market stress. So if this comes out, but keep in mind this number is like it varies week to week. Like it's very sensitive, right? So we'll keep that in mind. We'll wait for this data to come out. But do you have anything on your side that you're specifically looking for right now?
Yeah, there's two things, and we'll touch up on the second one after initial jobless claims comes out, and that's going to be Nvidia. Nvidia had earnings yesterday. A lot of people were anticipating it. Nvidia sort of the meme being the guy holding the world, and it's Nvidia holding the entire stock market.
Yeah, it's literally holding the entire stock market.
Yeah. Now, with that being said, though, back to the initial jobless claims, you touched on exactly what I wanted to say, and that's, can the initial jobless claims give us some strong insight into stress on the jobs market? Because that's what we do want to see to give us another rate cut, right? So if we have worse jobs news, we have initial jobless claims is way above the max, that could give us some insight into the next NFP, next other stronger job reports, unemployment rate. So we do want to keep an eye on that. We have about 37 seconds left till that comes out. Guys, let me know in the comments. Do you think we're going to be above or below? Comment above or below 215.
Above or below. Above or below, guys.
I unfortunately I think we come in below, but I'd rather see us come in above.
I would love an above reading. I know what that means for actual people and labor job layoffs, but like I would love a higher reading here, just with some volatility and this to play out. So I do have my positions at break even here because I know this is right with data. And if I do get taken out and let's say data does go in my favor, I much rather just wait for a better 212 below. So we came out right near forecast, but it is still within this range, right? 206 to 230. So don't expect too much volume or volatility. We'll just see how markets digest this number because that's what makes a difference, right? We can see that continued jobless claims are in fact outside of the minimum and maximum, but not by a lot, just by about 10,000. So not by too much. Gold on one side we're seeing some price movement down towards the downside, and we'll continue to monitor it because if we fail to break above, hold this area again, then we can expect to see a deeper pullback. And where that could go is potentially into 5,100, where we saw buyers jump in on Tuesday morning, right? So if we come down to here, then that makes for an optimal position if we start to see reactions. And that also takes out these buyers from here, and we see one-sided movement towards the downside. But we'll keep watching this currently, because this has been about a day and a half, since 2 days worth of holding this price area.
Yep.
On ES, minimal movements from the data, because again, as we mentioned, like it wasn't excessive. This number didn't come out and blew past the expectations. It remained the same. So it's very similar to what the market was forecasting. 6,000 above prior, which isn't that much, right? And imagine if this number was like 250,000. Now you would see some sort of way more volatile conditions in the market, right? You can see like very few times does it really spike up to 258 in October 2024, right? 220 in September 2025, 263, right? And then you can also see the big differences that were in the forecast and the actual, right? They varied by more than like 40,000. So we aren't seeing too much volatility due to that number. Everything is just holding currently. Me personally, like, I would love for us to get out of this range on gold, which would give us way more cleaner price activity.
Yeah.
Fundamentally
Agreed.
bullish, but gold not pumping up. Why?
That's a
Brother,
great
if I had
question.
the answer to why the markets move at their own timing and why they can't move at all times perfectly, I would be a trillionaire right now if I could dictate when the markets move.
Well, you know what? That's sort of the reason of market too, though, right? Something we realize and we recognize with some of these fundamental tools and some of the data that comes out is as traders and from the experience of just using the tool market just for a month. All you really need is a month to understand the ins and outs and how markets really do react to certain reports. But once you recognize, okay, initial jobless claims comes out every Thursday. This is really on the weaker side of things when it comes to the report itself. It's not going to give us a non-farm payroll or unemployment or CPI type of move that we see a 50-point breakout of the range and trend type of move. We've been very consolidated on the daily for quite some time now. There hasn't been a real market catalyst to give us that either optimism or strong uncertainty to drive either the S&P and risk assets higher or safe havens higher with the uncertainty. So at this point, we're waiting for something big to happen. Right now, we see in a lot of the headlines, gold steady amid Iran nuclear talks, Ukraine strikes. These are big headlines that could possibly change the market, right? So those are things that we would want to keep on our radar.
Yeah, I also want to bring to light that if the market is consolidating, it's due to there being, first of all, no catalyst that is impactful enough to generate enough one-sided orders in the market. So the reason when you see clean one-sided movement in the markets is because the amount of buyers outweigh the amount of sellers in these conditions, due to there being a very clear-cut catalyst, whether that be Supreme Court decision and then Trump saying, hey, no, it doesn't matter, I'm still going to do it.
Right.
And then markets rally. So that's what we're waiting for, is that if the markets are consolidating, it's because there's not enough buy orders to create a one-sided movement that's going to take gold towards 5250. But does that mean gold is not going to move? No, it does not mean gold's not going to move to 5250. It just means it's going to happen on its own time. Just because there's a data report doesn't mean that it's going to impact gold and make it push up just because gold is bullish. Gold is bullish. Gold has been bullish for the past 3 years. Gold has been bullish, if we want to go to the technicalities of it, since the dawn of time. Right? Gold has never lost its bullish nature since the dawn of time. Since it was discovered by humans, gold has held its value. It has only increased in both physical and intrinsic value. And we continue to see that get reflected in the charts. But of course, when you get thousands of pips of movement and hundreds of pips of movements like this, you are bound to see consolidative conditions. And as a day trader or as a trader in general, it's your responsibility to be like, hey, it's fine. I don't need to be in a trade today. Just because gold is bullish doesn't mean it's going to pump, because first of all, I can see with my eyes we're consolidating. Second, as Kevin mentioned, initial jobless claims happens every single week, right? It's a leading indicator, but at the same time, it is not the primary jobs report. It's not as influential as NFP is. It's not as influential as unemployment rate is, average hourly earnings is. All of those hold precedence. Initial jobless claims happens every week, and as we broke it down, this was in the range. This was right at forecast, so it was not going to hold much impact. And we broke that down, and then as you can see, the headlines started rolling out. US dollar index little changed after data because there was a minor move in the report, right? Euro barely down, dollar yen barely down, right? This is all because the data was not as impactful as, let's say, a print of 250,000 would have been.
Yep. Awesome. Guys, we're getting a question in the chat. Great question here about the ES and NQ. Nalab, you mind if I take the stage and we hit up the NAS and equities?
Absolutely.
Awesome, guys. So, guys, yesterday we had NVIDIA earnings. A lot of people have been anticipating this. Is huge. Now, quite honestly, I was expecting the double beat. We got the double beat. Nothing new there, right? So, with market, we can add NVIDIA to our watch list. Now, I have already added it, so it's right here. Gives us a quick little brief overview, right? Without having to Google NVIDIA earnings and go through 20 different articles. We're able to say, okay, NVIDIA crushes Q4 with $68 billion in revenue. That's massive. $78 billion Q1 guidance. That's big for their guidance too. So that's healthy for investors on an investor standpoint. This can help prompt the market higher right here. $78 billion guidance. That shows there's still strength in something like NVIDIA, right? A lot of people were concerned AI might be losing its steam, but it's really more so bigger companies like Meta, Amazon, Microsoft, Google. Their CapEx, that's how much they spend on AI, is increasing 20%, 30%, an extra $50 billion more than expected. And a lot of that extra capital goes to NVIDIA, the chip maker. So that's something else to keep an eye on. Data center hit 62.3 billion record, right? So this is really big right here. I did some digging myself, and 50% of this 62 billion is straight from 4 companies: Meta, Microsoft, Amazon, and Google. Just these 4 companies are paying NVIDIA $31 billion for their data centers. That's wild, and it's just growing.
It's crazy stuff, man.
Yeah.
Crazy stuff. When you think about it, it's just like it's a handful of companies just rotating AI money around one another. Right?
Seriously.
It's like kind of like a laundromat. It's OpenAI. OpenAI gives it to NVIDIA. Facebook gives it to NVIDIA. NVIDIA powers. You know what I mean? It's just all kind of rotating in that in that group of 5-6 companies.
Yep. Right here, another headline for NVIDIA, and this would also push back to Meta as a company too. Meta multi-year chip purchase deal signals sustained hyperscaler demand. Again, strength for investors. This is huge for investors because this whole big tech that we've been getting, the tech earnings that we've been seeing from Microsoft, we saw Microsoft sold off like crazy. Amazon sold off like crazy. They all had double beats, but they sold off because of their earnings call. While NVIDIA did the opposite. The earnings call came on, they said, we're doing great. 50% of this revenue is coming from these big companies, and we know that's just going to grow. We're just doing better and better. And now we just have another multi-year deal. We have a 250 price target, 30% upside from current levels from Morgan Stanley. There's a lot of optimism in NVIDIA right now. And of course, that is going to lead back into the S&P, the NASDAQ. Hopefully, we will see that follow through on NQ. We do have to be careful. Fed watch is down to just 2% for March.
Man, they need to bring those rate cut bets back up.
Seriously.
We need a very cool inflation report. We need some hot labor market data. And let's get the ball rolling. Let's get these cuts happening.
Seriously. June also dropped as well.
Right? Yeah,
50% to 40%. It's really up in the air of, does Kevin Warsh, who's known to be more hawkish, does he come in and change up the script and say, hey, let's start with the rate cut? Odds right now are 40% and declining. So it's something to keep an eye on.
Yeah, something to keep an eye on. But it only, again, like we've always mentioned, it only takes one data report. It takes a few headlines to change up these odds.
Yep.
For markets to really start rolling in the other direction and for us to see more one-sided volatility, right? Like every single time ES has had an outflow or S&P's had an outflow, instantly we've seen like a headline come in that starts pricing in rate cut odds increasing, and then we see inflows into US equities again. Like this isn't just like magic, right? Like this happens very methodically. uh, Thursday, February 5th, we got a headline saying that rate cut odds were being priced at 80% for June, and markets rallied from 65 67.55 to 7,000. We rallied about 200 points on S&P. That's a massive move, but it is all because of how hypersensitive markets are to any headline, to any data report, to anything that can shift the narrative in the more greedy aspect of it. Like if we get more rate cut odds improving and increasing, what do you think is going to happen to this resistance at 7,030? That's going to blast through if we get some sort of data report. Imagine if CPI drops so much, like 0.2% next time. You're going to see those rate cut odds increase, and you're going to see markets start to rally. You're going to see gold start to rally, dollars start to see outflow. So it's all just cyclical, right? And you always got to ask yourself, what does this mean for the rate cut odds? That is a question you should always ask yourself. If it doesn't mean anything for it, then you know what? Markets, the narrative isn't really going to change, and you're not going to see too much happen. But if we see severely impacting rate cut odds, ooh, monetary policy is what dictates all of it, right?
Yep. And that's why, and you know what it is too? It's these economic it's just these market conditions where rate cut odds are so important. It's not going to be forever. It's just right now. It's current. How markets are currently moving is really based off of two major things. If there's a new tariff headline, whether there's a new trade deal or Trump's threatening new tariffs, markets move lower. Next day, he says, never mind, tariff relief, markets move right back higher. And then there's the whole rate cut situation, and that is really moved by both. It's moved by headlines from different Fed speakers, and it's moved from the economic data, which again, market is going to give you that information the second it comes out.
Yeah,
absolutely. We've seen it update here on market and go, oh, well, that should increase the rate cut odds. We went to Fed Watch and it didn't change anything for like 10 minutes.
10 minutes, yeah. And then we got the headline coming in, so they tweet saying the rate cut odds are impacted. Like sometimes Fed Watch is super delayed when it comes to these real-time updates, which is crazy to me because CME is such a massive exchange, like the Chicago Mercantile Exchange. Come on, right? Like it's like you guys are one of the biggest exchanges in the world. How are you having these power outages when silver
right
time highs? You're shutting, you're halting trading, or there's a power outage. It's crazy stuff, and your feeds aren't real time, man. Unreal. It feels like those engineers are just messing around up there, man.
Yeah, they're just, you know what? They're not even in the office. They're like in a basement somewhere. Yeah. Guys, make sure you hit that like button. We're dropping tons of info today, giving you guys some great insights, covering everything that's important from NVIDIA to initial jobless claims. Really great episode. Nalab, thank you for being here today.
Of course, man. And since it's like a very slow and steady market movement, it gives us more time to, break things down and really talk about, even if there's topics anybody wants to talk about, we can always shine some light on it. So feel free to drop a comment if there's something you want us to cover, all the way from, it could be looking at the yen, could be looking at any other thing. But the main thing is that we're able to understand exactly what's going on, which data report's going to hold weight. Like as soon as this came out, even before this came out, like we mentioned, if it's near the forecast and within this minimum and maximum range, good luck. We're not going to see that clean one-sided volatility, right? As well as like you can see dollar barely saw a change, right? And I'll just open up another tab. Dollar right over here barely saw a change. Dollar just did an up and down, like just whipsaw from the data release to now. So see, nothing has changed much on the dollar. We're still holding a bit more bullish here, right above 97.5, but overall we've just rejected above this zone. So little change on the dollar, little change on rate cut expectations. This data didn't hold much weight, but we do have a bit more data tomorrow with PPI coming out as well, and Chicago PMI later in the day.
Yeah. It's gonna be okay. It's gonna definitely be a bit more impactful than the initial jobless claims.
Yeah, you know what? I think tomorrow we're gonna get more clean one-sided movement, just like the end. to end the week, right? Like even gold,
Yeah.
again, just retracing. I got taken out of my buys at break even again for the third time in this area. So I'm going to exercise a bit more patience right now and really look to see if I can get some buys on gold at lower price levels. So the next area I'm eyeing is because, okay, this could continue holding, but currently this was my third attempt. And sometimes like I had an attempt here, was up a few $1,000s, got out break even again over here, got out break even this morning, and then now again. So it's like, I'm going to wait. I'm not liking this, how we keep coming back down to this area. It could just as easily continue up from here. More than happily could do that. But to me, it's better if I just wait for something down here. Even 50-50 would be incredible. And you may be thinking, no, that's so far away. No, it's not. Do you guys see how gold liquidates, how these pullbacks happen? These are not like small pullback. This was almost a 2% pullback. Come on, guys. That's pretty big, right? So it's like we can easily see movement down to 5,100 or 50-50 if the market doesn't continue holding this area, right? And that could usually happen later on in New York session. So like after NYSE open, right? After New York Stock Exchange opens, usually those hours bring much more cleaner movement and volatility after like market participants are all realigned and everything is setting up, right?
Yep. Yeah, looks good, guys. Just remember, play the range. We know that our fundamentals are still leaning a bit more bullish, but that does not mean we just buy randomly when we can clearly see on the chart we haven't been able to find that continuation right now. Buy those lows, sell the highs, play the key levels, man. And listen, if you're not able to sit at your chart and sort of watch markets play out without feeling the need to force a trade, add some alerts and walk away.
Very true. That's a very good point. That's what helped me a lot back in the day, is just setting price alerts or setting limit orders,
Yeah.
Like if I'm looking for a buy here and I don't want to stare at the chart until price comes down here, I can just set a buy limit so that I have an order set. If price comes down here, it gets triggered, and now I have my stop loss set. I have my take profit set. I'm looking at a 1-to-5 risk reward ratio. Perfect. No need for me to be at the chart, right? You only really need to be at the chart if you're manual trading, if you're really looking for an entry and you're going to be available in that time period. But there's also a very fine line with the point that you don't want to be on the charts for too long, because it can start hindering your cognitive ability to make better decisions. Question, as you said, how does this impact your psychology before you start trading? How does it impact now? If you share some lessons, absolutely, I'll share some lessons. So back then, if I got taken out, I would be much more hesitant in re-entering, because I was like, oh, market's going to go against me. I was in this position. Now I'm not in it. And then I realized over time that sometimes your bias, your conviction and your analysis will be correct, but it just may take the market some more time to set up, to be ready, and in order for that move to actually happen, right? This is why you hear people talking about consolidative conditions, about accumulation, right? All of this is markets. Think about it like this way. There needs to be enough buy orders in the markets for there to be an imbalance, for we just see that one clean-sided volatility in buying direction, right? So if I enter here and I get taken out at break even, to me, I didn't lose anything. I didn't risk anything. So I'm willing to take that risk again if I see that setup. In this case, we saw an outflow. I got stopped out before daily close yesterday. Asian session created a higher low. I entered buys here, was up about 600 pips. And then my profit target was 52.50s is what I was anticipating, because I'm an intraday trader. This was the next range for me towards the upside. So we didn't get that. I woke up to another break-even stop loss, and again, I felt comfortable taking that risk. Took that risk again in this position, got taken out. Now it comes down to, what am I willing to do? Am I willing to re-enter when I know data is not really supporting what I wanted to happen, right? When conditions are a bit consolidating, we're not seeing clean one-sided movement on gold? Or do I now wait for a lower price point? And now this is where the decision comes in. I've tried 3 times to get this play. Maybe it plays out. Am I willing to sit out while this plays out? Absolutely. Am I willing to take another trade while this is consolidating over here and the data didn't come out in my favor, not necessarily right now. I'd much rather see how conditions develop in the next hour or so post NYSE open, right? So before, when I first started trading, I would never re-enter a position because I was like, oh, you know what, I'm wrong. But over time, I realized, I'm like, hey, sometimes it takes a while for the market to set up and for your analysis to play out. So did I do the best job at protecting my downside on this position? Absolutely. I absolutely manage my risk to the best ability, move it to break even. If it rejects here, pushes up, amazing. But look at even in this area. Imagine if you were buying here, you would have got stopped out here, break even. If you got stopped out here, didn't re-enter, then you would have looked for an entry here. Sometimes it just takes more than a few tries to get it, which is completely fine, right? There will be times where maybe I take like a 2% loss before I actually get the position in right. And then that position ends up running like 8% and I net 6. You know what I mean? So it's all about, if you're confident in your analysis, in your trade ideas, more than happily are you going to see great consistency if you just stick to it and have good conviction in your plan and ideas.
Yep. Gotta have a system. Gotta make it as systematic as possible so you
Yeah.
don't have that psychological attachment,
Yeah, exactly. And also another thing is that this, like, if we see, it's a very clear cut range that we're in, right? From 5150, 60s, all the way till 5216 area, right? You can also, if you're a scalper, and let's say you're just wanting to see how price reacts here, if we make it back above 75, and then now you start to see that bit of like a retest happen, then you can look to take scalp buys like here. You can look to take some short-term buys, target this high over here, target 5,200, and that would still give you a very clean range, like towards the upside that you can take advantage to, right? If you're a day trader, you'd want to look more in this area to look for that buying opportunity, right? On that bottom of the range where we previously continued to see buyers jump back into the market right around here.
Yep. Great.
Right? Otherwise, then it comes down to, okay, where can the market go? More buyers jump in, which looks like that 5,100 area down here.
There we go.
What do you think, Kevin?
Yeah, perfect. These are great levels, guys. Great. It's important to be able to mark out these levels. Join these episodes of Market in the Morning if you do have trouble finding them. The lab finds them amazing. I usually cover the ES and NQ too. So we're sort of covering everything you guys would like to trade. But it's important to find the levels so that when you're trading with the fundamentals, you're not just blindly throwing a dart on the chart and hoping it sticks. Right? You're saying, okay, I'm trading off my level with the conviction of fundamentals too.
Absolutely. Another thing is, like, even market is showing 5,100 as a pullback level. So if we start to see like market come down to here, then you're going to see price potentially reject it, right? And we also have a Fed speech coming up. Bowman speaking at 10 a.m. So we'll see if there's any dovish remarks, which can continue to help push gold up, or if there's any hawkish remarks, then we can potentially see outflows happen on gold, which can drive us to our better buying price areas that we want to see, right? No, I don't see it as, I honestly don't, because my plan was, when I entered this trade, was to hold till this target. Like, that was my plan, right? Now imagine this, is that let's say I risked one, okay? Whether that be 1%, let's say I risked, for numbers sake, let's say I risked $1,000 on this trade, okay? I had a 200 pip stop loss, all right? My take profit is up here, which is a 1 to 4.7. And I went in risking 1,000 to make $4,800. Let's say that's what my risk was. Now, if I look to diverge from my plan and I look to close here where my position topped off, that's a 1 to 1.9. That's not what I'm looking for. My plan was, I went into it, I'm going to target these highs. And that was my plan in every single one of these positions. And you'll see it. You'll see why this will play out, because when this intraday move happens, we're going to see that clean one-sided movement right to 5,250, because that's the range we're playing in. The range is from here, 5,100 to 5,250, and currently we're holding above this price handle. So I don't see it as unrealized profit, because it was never in my plan to take profit there. right? So it doesn't make sense to me even think about, oh, I left out. Like I was floating about $4,000 yesterday before going to sleep, and I woke up break even. Was I pissed? I would have been pissed about it 2 years ago, but now it's like, okay, that wasn't even my plan to take profit there. My plan was to take profit up here. So why would I? If let's say price came up to here, like let's say it just inched my take profit and it came 30 points below, and I refused to take profit, then I would be on the opposite end of it, where I would be pissed at myself, being like, why the hell would I not take $8,000 off the table right there? And why did I want to wait 20 more pips? But the fact is that it wasn't even at halfway to my target level. So it's like me diverging from my plan when the upside is so much more than the downside risk is to me.
Yep, that's awesome, guys. Amazing insight.
Hopefully
Fire, bro.
Amazing. You know, it's all psychology, guys. Like it's literally all psychology. You just have to let these positions run. Don't interfere with it. If there's a stop loss, let it run to your stop loss. If there isn't, then just manage it the best to your ability.
Yep. We're gonna request for USD CAD. If you want to cover that, if you don't want to, I got it up on market as well. But let's see, what's keeping it bullish since February 11th?
So you can also see that we also saw that's when dollar started bottoming off too. So that's what's keeping USD CAD bullish, is the fact that dollar bottomed off. That was the last higher low that we saw on the intraday time frame on dollar as well.
Yep. Let's check this out, guys, on market.
Right, we've seen like since start of February, we've seen a more hawkish Fed as well. We've seen rate cut bets get pushed back. We've seen dollar increase in strength, right? So all of this is holding just the same correlation on dollar pairs.
Yep. Very good. Cool, man. Look at that, you guys. Right. We could break it down here for a half hour for you guys to tell you guys what's really moving in markets, or you could use market yourself and break it down in probably like 30 seconds and have an idea.
Exactly. So as long as dollar continues to hold bullish, you'll continue to see those correlated pairs hold bullish as well, right? And not necessarily does it always have the same impact on gold, because gold is a globally traded commodity, and it is very hypersensitive to rate expectations, to overall economic data, to overall geopolitics. So, but that's why USD CAD is holding bullish.
Yep. Nice, good stuff. And then we have a question for
psychology is super important, and it's also not only your psychology, but like the market psychology, right? Like you're going to know that the market is likely to do its thing. It doesn't always have to obey what you have in mind, right? You're working on the market's timing, not the other way around, right? The market doesn't work on your timing. Yeah, I went into this trade yesterday on Wednesday at 9:30 a.m. hoping, I'm like, yeah, hopefully this plays out by Asian session tonight. And you know what? I would have banked $6,000. Boom, I'm done for the day. 3 tries later, still hasn't played out. It's not on my timing, guys. It's on the market's timing. So all we can do is plan, position ourselves, understand what's happening, keep track of what's happening, right? Like Miran, the Fed should cut a percentage point this year in 4 quarter points cuts that come sooner than later. Let's go, Miran. Let's spit some more dovish headlines out here. On food prices, note that you can always find outliers. Prices may seem stable now. AI will be profoundly disinflationary. Do not think U.S. has an inflation problem now. Let me like that one right there. Labor market has been quite a bit better, but it's too early to sound on clear. So Miran's coming back, talking a bit more dovish, right? Which is good because this would put more impact on gold, right? So if we start pushing down now on gold and we get to a better buy area, we have now just gotten a dovish headlines. We also have a Fed speaker coming out in about an hour. So we'll continue to monitor, but that's what I'll be looking for, is these lower price points, right? Lower price point, potentially a sweep of 5,150. We quickly liquidate down to 5,100 or 50-50, and then we can see buyers jump back in and reposition themselves on the intraday time frame.
Beautiful. Guys, you get the best trade setups and best fundamental breakdowns here on Market in the Morning, Tuesdays and Thursdays. Make sure you're liked and subscribed.
Absolutely.
We got one last question from the chat, and guys, we will be wrapping this episode up in just a couple minutes. Best pairs for divergence.
So the best way to measure like a strong divergence is to look at interest rate differentials between the currencies. So a good one for a while was, if you've known about the yen carry trade, right? So if I pull up USD JPY and we go on the weekly time frame, you can see that excuse me,
What?
you can see the big rate differential since the past decade, right? Because of the yen was in negative rate territory for the longest time, right? And then now they went to zero interest rate policy, which is ZERP, right? Which you probably heard ZERP. And now they're into more positive rate territory because yen went through a big deflationary crisis decades ago in the 80s, right? Right here in the 80s, they went through a massive deflationary crisis. And since then, the yen's monetary policy has been ultra easing, right? Where they were like basically Bank of Japan is the biggest buyer of Japanese government bonds in the world. So that every single day you see Bank of Japan buying a ton of Japanese government bonds to really prop up the yen. And that's also why if we go to JXY, Japanese currency index, for years, yen has just been on a massive downfall since March 2011. Like you can see, yen has just devalued so much over the course of the year. And that's how you can look at the best way to measure divergence is through looking at rate differentials. If there's two currencies that have completely opposite monetary policies, that makes it a very clean one-sided movement. And that's what you end up getting on something like USD JPY for years, right? You get that from like March 2011, where you just get one clean one-sided swing higher time frame movement because of a massive rate differential.
Awesome, man. Noab, is there anything you don't know about the market and Forex and futures or?
Man, I am a man who likes to study and learn. So anytime I can get my hands on something, I like to absorb it.
That's awesome.
Right. And I think that's what's important. It's that if you don't know everything about what you're doing, then you're just a dumbass.
And you're a dumbass if you're not actively trying to learn.
Yes, that's actually better. You're a dumbass if you're not actively trying to understand everything about the field you're operating in. There we go. Kevin's quote, guys.
Guys, that was today's episode of Market in the Morning. Nil, thank you so much for being here. Absolutely killer episode as always. Guys, hit that like and subscribe if you haven't. We will see you next time. Take care and happy trading.
Take care, guys.